When CarMax, the king of used cars, won't even buy your truck, you know something's seriously wrong. Over the past few weeks, viral posts have been popping up all over Reddit, Facebook, and TikTok. People are walking into CarMax locations expecting trade-in offers like before, only to be met with silence. Or worse, a number so low it feels like an insult. One guy brought in his 2021 Ram 1500 Limited, barely 30,000 miles, spotless, and CarMax wouldn't even make an offer. Another owner tried selling his Ford F-150 Platinum, which was worth nearly $65,000 2 years ago. CarMax offered him $32,000. That's not just depreciation, that's a total market collapse. And here's the thing, CarMax doesn't make emotional decisions. They're a data company first. When they suddenly stop buying trucks, it means their system, the one that tracks tens of thousands of sales nationwide, is screaming that values are falling faster than anyone expected. So what happened? How did we go from record-breaking demand for $80,000 pickup trucks to this? A market where even the biggest used car buyer in America doesn't want them. To understand that, you have to rewind a bit. Back in 2021 and 2022, trucks were untouchable. Chip shortages, factory shutdowns, and supply chain chaos pushed prices through the roof. Dealers were charging $10,000 over MSRP, and buyers didn't even blink. Trucks were flying off lots faster than they could arrive. But that's the thing about bubbles. They always burst. By mid-2023, interest rates had doubled. Financing an $80,000 truck suddenly meant $1,200 a month payments, sometimes more. Gas prices spiked again. Consumer debt quietly hit record highs. Then the EV wave cooled off. Lease returns started flooding back into the market, and suddenly, everyone who wanted a new truck already had one. Now it's 2025, and dealer lots are overflowing. Drive past any major dealership, you'll see rows and rows of unsold trucks, F-150s, Silverados, Rams, even the high-end trims, the ones that used to sell instantly, sitting for months, collecting dust under reduced price banners. And dealers, they're panicking because trucks aren't moving. Financing has dried up. Banks are tightening loan approvals. The average truck payment today is higher than what many people pay for their mortgages. And when a vehicle's resale value collapses this fast, it traps owners in a financial nightmare. They owe more than the truck's worth, upside down on their loans with no easy way out. This is where CarMax comes in, and why their refusal to buy is such a big red flag. CarMax operates using real-time market analytics. Their algorithms update daily, scanning auction prices, trade-in data, wholesale movements. When that system starts flagging used trucks as declining assets, CarMax reacts immediately by lowering offers or walking away entirely. Think of CarMax as the canary in the coal mine for the auto market. If they're pulling back, it means they've already seen what's coming. And right now, what they're seeing isn't pretty. Let's look at some numbers. In 2022, CarMax was offering between $55,000 to $60,000 for a lightly used F-150 Lariat. Today, those same trucks are being quoted for $28,000 to $35,000, almost a 50% drop. Silverado high countries that fetch $62K are now sitting at $33K wholesale. And diesel trucks, once the kings of resale, are getting hammered the hardest as fuel prices stay volatile and maintenance costs rise. Dealers are slashing prices, running Trucktober and end-of-year blowout events just to clear inventory. But the problem isn't supply anymore, it's demand. Buyers have vanished. Between high interest rates, record personal debt, and a cooling job market, few people are willing or able to drop that kind of money on a new truck. So while the showrooms fill up, CarMax steps back. They don't want to be stuck holding depreciating assets that could lose thousands more in value by next quarter. And here's the kicker, CarMax usually spots market corrections months before the public does. Back in 2008, they quietly reduced used SUV purchases right before gas prices spiked and the market tanked. They did it again in 2020 before the lockdown crash. And now, in late 2025, it's the truck's turn. It took 3 years to build the truck bubble and just 3 months to blow it up. If you're a truck owner right now, you might be sitting on a ticking time bomb of negative equity. Those built tough and like a rock ads didn't prepare anyone for this kind of financial hit. For the first time in a decade, trucks, the backbone of American auto sales, are a liability. But what's next? Does the market rebound? Or are we just at the beginning of a deeper correction that could reshape how trucks are valued for years to come? Let's dig deeper into how we got here. and what CarMax's data might be warning us about next. To really grasp the scope of what's happening, you've got to look beyond just prices. This is a full-blown market correction triggered by layers of economic pressure. It started with oversupply. During the pandemic, manufacturers ramped up production as soon as supply chains reopened. Ford, GM, Ram, they all bet big that demand for trucks would stay sky high. After all, trucks had become more than work vehicles. They were luxury status symbols. Heated steering wheels, panoramic sunroofs, massive touchscreens, six-figure MSRPs. The industry thought consumers would keep paying premium prices forever, but once those interest rates climbed, reality hit. The buyers who could afford those loaded trims already had them, and the average American family, they were getting crushed by inflation, rising food costs, housing expenses, everything. Suddenly, dropping $80K on a truck wasn't a dream anymore. It was financial suicide. Then came the EV slowdown. Remember all the hype around electric trucks? Ford Lightning, Rivian R1T, Silverado EV, they were supposed to be the future. But as interest faded and battery costs stayed high, people pulled back. Now you've got dealers sitting on lots full of both gas and electric trucks that no one wants. A perfect storm of stagnation. And it's not just consumers. Lenders are spooked too. With repossessions quietly climbing and used values collapsing, banks are tightening credit requirements. That means fewer approvals, higher down payments, and shrinking buyer pools. CarMax saw this before anyone. Their internal data likely showed that trucks, especially full-size and heavy-duty models, were losing value at a pace unseen since the Great Recession. So rather than get caught holding depreciating stock, they pulled the plug. To the average consumer, that looks like CarMax refused to buy my truck. But behind the scenes, it's a strategic retreat, an early signal that the used market has turned toxic. Let's paint a picture. Imagine walking into CarMax in 2022. The sales floor is buzzing. Used trucks are gold. You bring in your 2020 F-250 Lariat. They print you an offer for $68,000 before you even finish your coffee. You're thrilled. You think, I'll sell it now and maybe grab a new one when prices settle. Now it's 2025. You walk into that same CarMax, same truck, but this time the associate looks nervous. He goes to run the numbers. You wait. 10 minutes pass. He comes back with a sheet that says, "We're not buying this vehicle at this time." That's not just rejection, that's a warning shot from the biggest used car retailer in the country. And what happens next is brutal. As CarMax and similar retailers back off, trucks flood the auction markets. Manheim, Odessa, pushing wholesale prices down even faster. Dealers who bought high during the boom are now underwater. They can't sell new trucks because they're still sitting on old inventory they can't unload without massive losses. It's a domino effect. Each dealer drops prices, hoping to move units. But when everyone does it at once, the floor collapses. Wholesale prices plunge, book values adjust downward, and suddenly every owner's trade-in is worth less overnight. This is why you're seeing those viral TikToks of owners shocked by their offers. They're not exaggerating. The data backs them up. According to Black Book and Manheim reports, used truck values have fallen as much as 28% year over year, like the fastest drop in modern history. And while new truck sales are starting to stall, it's the used market that's feeling the shock first. For many Americans, trucks aren't just vehicles, they're lifelines. Contractors, landscapers, farmers, they rely on these machines for their livelihoods. When those assets lose half their value in 2 years, it's not just an inconvenience, it's an economic gut punch. Imagine a small business owner who financed two $75,000 trucks for his crew in 2022. Today, they're worth maybe 40K each, but he still owes over 120K combined. He can't sell without taking a huge loss, and he can't refinance with interest rates near 9%. Multiply that story across the country, and you see why the truck market collapse isn't just about numbers. It's about real financial strain hitting everyday people. CarMax knows this. They know once repossessions rise and consumer credit tightens, the resale market freezes. Trucks start piling up in storage yards instead of driveways. Lenders start adjusting collateral values. Insurance companies start paying out less on totaled trucks. And the entire auto economy, from parts suppliers to service centers, starts feeling the squeeze. The scary part? This kind of correction doesn't reverse overnight. It takes time for supply, demand, and financing to rebalance. And the last time we saw anything like this, in 2008, truck prices took years to recover. So here's the million-dollar question. If CarMax is refusing trucks now, what are they positioning for next? Are they waiting for values to hit rock bottom so they can swoop in and restock cheap? Or do they believe that the truck market, and as we know it, has fundamentally changed? Because the truth is, buyers today aren't chasing the same kind of trucks. People want smaller, cheaper, more efficient vehicles. Those massive, fully loaded V8 pickups that once ruled the road might be turning into relics of an era that's ending faster than anyone expected. And if that's the case, the crash we're seeing right now might just be the beginning of something bigger. If we zoom out, what's happening in the truck market isn't just a blip. It's a correction of excess. For years, automakers built trucks not for workers, but for profit margins. The average price of a full-size pickup climbed from around $40,000 in 2018 to over $70,000 by 2022. That's nearly double in just a few years. And not because the trucks suddenly cost twice as much to build. Manufacturers loaded them with luxury features, knowing banks would stretch loans out to 84 or even 96 months. Consumers didn't notice the ballooning cost because payments stayed affordable. Until interest rates exploded, then the math stopped working. Now, people who were once willing to overpay are walking away completely. And those who bought at the peak? They're stuck in what economists call negative equity traps. That's when your vehicle's market value drops below what you owe on it. And the only way out is to take a loss or keep paying for a depreciating asset. This is why CarMax is pulling the brakes. Their data doesn't lie, and the algorithms don't feel sympathy. When the numbers go red, they stop buying, period. Let's look at how fast this collapse actually unfolded. In June 2024, average wholesale prices for used trucks were down 8% year over year. By September, that number doubled to 16%. Then, by November 2025, right now, we're seeing drops between 25% and 35% depending on model and region. In just 5 months, a market that was overheated for 3 years completely imploded. Dealers started whispering about it first. Trucks are slowing down. Then came the YouTube videos, the TikToks, the viral posts, people shocked that their 2-year-old F-150 dropped in value like a falling rock. And finally, the CarMax pullback, the biggest confirmation yet that the market had officially cracked. Because CarMax doesn't panic, they preempt, they read the data before it hits the headlines. But what's scary isn't just that CarMax won't buy your truck, it's what that means for everyone else. When they stop buying, it creates a chain reaction. Competing dealers rely on CarMax's wholesale activity to gauge pricing. Auction values get set by what CarMax is willing to pay. When they vanish from the bidding tables, prices fall faster. Suddenly, trucks that were trading hands for $50,000 at auction last quarter are struggling to clear $35,000. That drop forces banks to update their collateral books, which lowers how much they'll lend on a truck loan. So now even if someone wants to buy your truck, they can't get approved for enough financing. It's a loop. And it's tightening fast. The writing's been on the wall for a while. Between overproduction, shrinking affordability, and fading consumer appetite for massive vehicles, the full-size truck boom that defined the last decade is finally crashing back to earth. You can see it in every corner of the market, from fleet auctions where 3-year-old F-250s go unsold, to dealership rows stacked with unsold Rams, to online marketplaces flooded with private sellers slashing prices week after week. Even rental companies like Enterprise and Hertz, which used to buy trucks in bulk, are quietly downsizing their pickup fleets because resale values have become unpredictable. And yet, this isn't just about numbers or supply and demand. It's about trust. The truck market thrived because people believed their vehicles were safe investments, something they could always resell for good money. That belief is being shattered right now. When CarMax refuses your trade-in, it's not just a transaction, it's a signal. The system that supported inflated truck prices for years is finally breaking down. But here's where it gets even more interesting. If CarMax knows truck prices are collapsing, does that mean they're preparing for a rebound play? Because historically, when they pull back hard, they also buy back in once the market bottoms out. Are they quietly waiting for the moment when wholesale values hit rock bottom so they can flood their lots again with cheap inventory and massive profit margins? And if that's the plan, how close are we to that bottom? Some analysts say it could hit in early 2026, once the current oversupply burns off and consumer confidence starts to recover. Others warn this downturn could stretch much longer, especially if automakers keep producing trucks that the market simply doesn't want or can't afford. Because the deeper question here isn't whether truck prices will bounce back, it's whether they should. Have we reached the end of the era of $90,000 pickups and luxury work trucks? Are consumers finally done paying luxury car prices for vehicles that used to be tools? The data is starting to say yes. Demand is shifting towards smaller, more efficient vehicles again. Even mid-sized trucks like the Tacoma and Ranger, and once the affordable alternatives, are now facing price fatigue. People are walking into showrooms, looking at $60K stickers, and walking right back out. And when consumer psychology shifts, it's hard to reverse. So what happens now? If you're a truck owner, the best move might not be to panic, but to wait. Selling now in the middle of a collapse could lock in your losses. If you need to trade in, get multiple appraisals, compare local dealers, and watch the market data weekly. Because this story, the one CarMax just triggered, is still unfolding. We're witnessing the early stages of what could become one of the biggest used vehicle price resets in history. And as the data keeps rolling in, one thing's for sure: when the biggest player in the used car game refuses to buy your truck, it's not just your problem, it's a warning for the entire industry. Let's be real, this isn't just a price correction, it's a confidence collapse. When everyday people start posting online saying, "CarMax wouldn't even give me a number," that shakes trust in the whole market. For years, we were told that trucks were bulletproof, that they held their value better than anything else on the road. That's what justified those sky-high monthly payments and 7-year loans. But now, that narrative's been shattered. Consumers who once felt proud driving off the lot in their new Silverado or Ram are now looking at those trucks like financial anchors. And this isn't just happening at the high end. Even mid-trim models like the F-150 XLT or GMC Sierra SLE are getting hammered. A truck that sold new for $58,000 in 2022 might fetch barely $30,000 today on the trade-in market. And once people see that kind of loss firsthand, they don't come back to the showroom so quickly. Let's take a step back and remember how we got here. During the pandemic, automakers realized they could make record profits by prioritizing expensive trims. Why build 10 $40,000 base models when you could sell 5 $75,000 luxury ones and make more money? It made sense until the buyers disappeared. Now those same companies are stuck with expensive inventory that doesn't match the new reality. People are broke, credit cards are maxed out, and home prices are through the roof. Consumers aren't upgrading vehicles every 2 years anymore. They're holding on or downsizing. And that shift in mindset, it's what's breaking the truck market open right now. Meanwhile, CarMax is just the first domino. You'll start hearing similar stories from AutoNation, Drive Time, and even franchise dealers who once paid top dollar for used trucks. They're all pulling back, using the same auction data CarMax uses. Wholesale prices fall book values, adjust trade-in offers, shrink consumer confidence tanks, retail sales stall. It's a vicious feedback loop, and it's accelerating. CarMax's refusal to buy trucks isn't them being picky, it's them dodging a storm they helped forecast. They know exactly where the market's heading, and it's not back up, not yet. To put this in perspective, during the pandemic boom, trucks were appreciating assets. You could drive off the lot, put 10,000 miles on your F-150, and sell it a year later for more than you paid. That's not just rare, that's unnatural. Now we're on the opposite end of that swing. Vehicles are depreciating at record speed, and trucks, being some of the most overvalued assets during the boom, are leading the crash. It's the same story as housing bubbles or crypto. Easy credit, inflated demand, and everyone thinking the good times would last forever. Until they don't. We even spoke to a few small town dealers who said trucks that once sold within days now sit for 90 to 120 days with almost no serious buyers. One dealer in Texas said, "We've never seen anything like this. We're cutting prices $5,000, $10,000, even $15,000, and still nothing." Another dealer in Ohio admitted they're parking unsold trucks off-site because the lot looks too crowded. These aren't just isolated cases, it's a nationwide phenomenon. The oversupply is so massive that some automakers are quietly offering hidden dealer incentives just to move metal. Money under the table that doesn't even show up in ads, because public discounts would destroy resale values further. But here's where it gets truly alarming: the financial side. Many of the loans written during the 2021-2023 truck boom are still out there. Millions of Americans are paying top dollar financing on trucks that have lost 30-40% of their value. That means the next wave could be repossessions. As owners fall behind on payments, lenders will flood auctions with used trucks, pushing prices even lower. It's a downward spiral, and once that momentum starts, it's hard to stop. CarMax knows this pattern better than anyone. They're not refusing to buy trucks because they can't sell them today. They're refusing because they know what's coming tomorrow. And maybe that's the real story here. CarMax isn't panicking, they're preparing. They've seen this cycle before: inflated market, sudden correction, panic selling, then a golden buying window when prices bottom out. It's how they make money. Not from guessing the market, but from timing it perfectly. So when CarMax refuses your truck, it's not personal, it's predictive. They're reading the writing on the wall that most consumers haven't yet. The era of inflated truck values is over. But what about the people caught in the middle? The guy who financed his dream Ram 1500 at 6.9% interest, only to find it's worth $25K less today. The contractor who can't trade in his fleet because every offer leaves him upside down. Those are the stories getting buried under the data. And they're the reason this isn't just a market correction, it's a human one. Still, every collapse brings opportunity. If you're a buyer, patient, cash ready, and strategic, the next 6 months could present once-in-a-decade deals. As dealers scramble to clear lots and lenders adjust valuations, prices may hit levels we haven't seen since before the pandemic. The key will be timing and watching CarMax closely, because the moment they start buying again, that'll be the signal the market's bottomed out.